90% of day traders lose 9% of their money within 90 days. So if you try it long enough, you will lose all your money.
These guys are the sacrifice. These guys are being sacrificed to the system.
They teach you money is evil, loving mammon is damnation. Lacking funds is lethal, chasing riches is salvation. Alchemic sorcery, draining life force energy. Truth is veiled, pay to play, a system made for you to fail. Taxed each day, hypno retail, stuck to jobs with cross and nails. Hermes cut down in his prime, Saturn scythe is killing time. Maybe commerce is a crime, it's a war on your mind. Sold our youth for chains of debt, got 30 coins made of regrets. So you better not let that worse fishers with men in our nets. Can we redeem the years we sold and alchemize our time to gold? Treat the stigma placed on wealth to live grateful with perfect health. Set us free from the dreaded lead, finding abundance in our heads. Breaking this money magic spell, the middle way reveals itself. Once temples of the ancient past made sacred every coin they cast. Our divine supplications become job applications. Sacrificers of the flock, now we're chained to the block. Waste the day, watch the clock, trained to think that work just sucks. Modern money's digital, fiat scam puts in calls. View the world through our cells, we're employed in corporate hell. Stocks and bonds, words for slaves, the workforce of our modern age. Now we see bars and cage, lift us off the ledger's page. Cause we know that life is free, there's enough for you and me. Just have to plant some good seeds, the land grants and we receive. We will get back the years they stole and resurrect our living souls. Embracing true spiritual wealth, giving our children perfect health. As we untether from the dead and build a homestead in our heads. Breaking this money mind control, the middle way becomes our road. Alchemy of economy, imagination is the mint. Occult conspiracy in the bills they print. It's a zero-sum game with straw men and legal names. Growing green plants, stashing greenbacks, these organic stacks. Ancestor healing, going way back. Eating sunlight like a gold snack. Invite you to my chemical wedding party, mystical, my opposites attract. Male and female unite, they can't handle my light. There's a future currency, children born with no price. It's an inner alchemy, our potential so bright. Look within and you will see we do spiritual alchemy. The InnerVerse will soon reveal the lapis philosophorum. We break away from Saturn's wheel, it's a transcendent agora.
Welcome to the One Within, all to the InnerVerse. I'm your host, Chance, and as we enter Taurus season, a sign ruled by Venus, the goddess of currency, beauty, and wealth, it's once again an amazing unplanned synchronicity that we just happen to have a show in store for you that contemplates how all those things are shaped by the occult architecture underlying the world's economy, and how those initiated into the mysteries of finance are able to work within that system to achieve and maintain prosperity. Taurus and its archetypal bull has long stood on Wall Street as a symbol of material power and gain. But beyond that mundane surface meaning, the bull of the markets quietly keeps the ancient secrets of accumulation through ritual offering and sacrifice, and the hidden in plain sight final culmination of alchemy's most fantastic endeavor, the transformation of lead into gold. Joining me today is Brandon Sterling, the man behind Safe Haven, a mystery school for seekers of occult wisdom in business and finance, where he breaks down business and wealth strategies to their prima materia, building blocks, and teaches his students how they work and the best strategies to put them all together to create wealth in their real lives. Over the last few years, Brandon has continually impressed me by bringing some hard truths to the so-called truther community, along with a great friend of the show, Clint Richardson from Red Pill Sunday School, as together they've pulled back the curtain on several self-styled legal gurus in the Patriot movement and demonstrated their fraudulent and dangerous nature. Brandon has also done some incredible work teaching the simple yet arcane philosophy and method of utilizing PMAs to create real freedom in one's life and business, helping his students leverage the public to benefit their private lives without risking government interference. And today, this financial industry insider who's defected to the side of good will be revealing to us how trading markets actually work and how traders, knowingly or not, are performing a modern form of ritual and alchemical magic. But this isn't just an entry-level course on getting into trading, because this is InnerVerse, so you know we have to dial up the mystical and esoteric elements to 11. So I'll be weaving into Brandon's information some of the most fascinating nuggets from the late Tracy Twyman's incredible book, one of my favorites, Money Grows on the Tree of Knowledge. That way we can really drive home your awareness of economic magic as alchemical transmutation. There's going to be something for everybody today. For traders, we'll reframe your strategies as occult initiations. For occultists, we'll reveal that markets are ritual engines. And for the spiritually curious, you'll come to see how belief and sacrifice run beneath the entire road to economic sovereignty. You don't get content like this anywhere else. So make sure and check the show notes for all the ways you can support InnerVerse and for the links to Brandon's school safe haven. Buckle up, kiddos, because it's time to do some high-level thinking with he who trades on the right side of the veil, the decryptor of financial sorcery himself, Brandon Sterling. Thanks for joining me, man, and welcome to InnerVerse.
Hello. It's good to be back.
I'm pretty stoked, man. We got a lot to talk about. What made you decide to de-occult this mystical world of finances and tradings?
Well, I was always curious, even as a child. I remember watching the news as a kid and seeing like the arrows up or down, trying to make sense of it all, between the headlines and the numbers flashing. So I was always curious what made it move the way it did. Never got really a clear answer on that. And then, of course, during the '08 financial crisis, my father's occupation was heavily affected by that. He was in the trades. So at the time, I saw that financial turmoil. I was young at the time. I was only in middle school, but I kind of saw the effects of these economic happenings, let's say, on the real world. And I kind of grew a distaste towards the whole financial industry, as well as a lot of people did after that. But I've always had like an entrepreneurial mentality to me. I haven't taken directions very well my whole life. So that first took my interest. When I learned more about the markets, I saw this movie called Big Short. Right? And a lot of you might have seen it. It's about Michael Burry. He makes money on the market dropping during the '08 GFC. So I was kind of curious. I was like, okay, so traders, it sounds like they can make money on markets going down and up. So I thought that was kind of weird. So I looked more into it. And in 2019, I started taking it very, very seriously. And I started to notice that hundreds of CEOs were stepping down all of a sudden. This was in fall of 2019. And I thought that was really strange. Out of nowhere, hundreds of CEOs are resigning left and right. What's going on here? There were some whispers of stuff going on in China, but we didn't really know the full extent. All I knew was there was a black swan event coming. I didn't know what it was going to look like. But I wanted to position myself to benefit from this. So that's when I started taking the markets more seriously. I tried on my own, but throughout the years, I had a lot of business connections. And so I was able to get mentored by some guys that actually had been in a few different institutions, pension funds, investment banks, hedge funds. So I learned a lot from those guys. It was completely different than what I thought I knew through my own research. So yeah, what a world of difference. And then after I got mentored from them, my company, my business actually contracted with another business, and I started trading some of their capital. I didn't like it though, because I felt like I was working for somebody. even though technically I was an independent contractor, it wasn't exactly the style of trading that I wanted to do. So I actually just went on my own with my own capital since. And a few years ago, actually, I started teaching this stuff to other people. So that's what got me interested in markets.
Yeah. So just paying attention and realizing that there must be some kind of secret rules behind all of this. And then I guess as you dug, you found that this was a lot more mystical than it might have seemed. That's how I'm starting to perceive it. Actually, I have been for a while, but your presentation and the stuff I've seen from your course really unlocked a few connections for me to what this trading thing really is on a consciousness level or on a magical level, that it's not even new, that there's been a form of this going back all the way to the ancient world and how people interacted with the temple system of like ancient Roman stuff. So we'll talk about that, but maybe it's a good idea to just pop into our presentation that you've prepared so generously, and we'll unpack these things along the way, because I think we have so much to talk about. We better not waste time.
Yeah, sure. Let's get into it. All right. So yeah, as the title says, and Chance alluded to earlier, this show talks a lot about alchemy, as far as I remember. And
oh yeah,
what's interesting to me is when I never thought I had when I was younger, really into markets, was I started to get the realization that all of these companies that we spend money with every day, whether we realize it or not, a lot of them are public companies that are traded on the stock market, and our decisions, are influencing the outcomes that these companies are getting, or is it the other way around, right? So I started getting more curious about that, and what are the patterns with some and all of that. I mean, I've always been a big pattern recognition person.
Me too. And that's why I inserted this slide into your show. And I'm going to sneak in some commentary at different points throughout this presentation, as I had a chance to look at it beforehand, and I'm doing my best to make it all weave into the order that you've got it prepared. What we're looking at here, though, this is an old alchemical drawing from, I'm blanking on the text, but I could look it up. The point is, it's from like the Middle Ages, and we're seeing Kronos, or Saturn, the god of time, about to cut off Mercury's legs at the knees. So what does this have to do with the economy? And why is this a part of alchemy? Why is this imagery something that we see in alchemy? Why is one of the top financial journals of history called The Alchemist? There's reasons for all this stuff. So I want to first set the stage for this idea of alchemizing time, because that's really what this magic is all about. So people can have it in mind as we progress forward, just in the back of your head. So going back to Money Grows on the Tree of Knowledge, Tracy Twyman writes, money appears to be created ex nihilo, that is, out of nothing. But in reality, it's being created from something intangible, specifically time, or human labor measured over time. That is our youth, represented by Mercury, being sacrificed to Father Time to create gold, or at least the likeness of it. So this is a big part of the escaping the matrix of our current world, that what you're offering in this trading class is possibly able to help someone achieve. That is no longer needing to sacrifice your youth, your vitality, most of the time of every day of every week for debt-based currency that gets you nowhere, that just gets inflated and devalued. It's really interesting. You're framing traders as alchemists of time. And in magical systems of correspondence, Saturn, the god of time, is connected to lead. Do you see this trading thing as a ritualized transformation of time, which is symbolic lead, into gold? Is Twyman right about alchemy being perfected by modern economics, where they leave behind the medieval idea of a physical transmutation of lead to gold, but instead have created a system that makes something out of nothing, gives value to valueless paper, or puts people's belief of value into digital numbers?
Yeah, I mean, it's interesting because go back to your point about how most people equate money with their labor, right? And how trading, it doesn't necessarily, and it does take work. Don't get me wrong, it's not easy, but it's quite different because then you're using the what do you call it, the eighth wonder of the world, the law of compounding. So this is like that, but on another level, because it's one thing to invest and get compound interest from that. It's a slower run, but I mean it does work long term. Multi-decades usually when it comes to stock market. So the whole point of trading is to be able to outperform what the market itself is doing, which we can talk about that more in a second. But essentially, yeah, the whole point of trading is to make that number on the piece of paper bigger, right? So kind of going from the lead to gold, we'll talk about what that looks like. So yeah, a little bit about myself. Like Chance alluded to earlier, my background is working with high net worth individuals. I first started with business owners, small business owners, and then later in my life, I ended up getting into more ultra high net worth individuals, working with them. And so that led me into the smart money world. So I've been doing this for a while, and for years I didn't want to put this information out there between all my work. But a few years ago, some friends of mine told me I should do it, so I put myself out there finally. So yeah, we'll do a quick recap of what we'll go through today. So first, I want to demystify the system, the financial system in general, and then also markets. And then the forecasting heuristics, because a lot of people say traders have insider information. Now, technically that is illegal. And really markets are public in a way where there actually is not a need for insider information. So I'll talk about how traders can forecast. And then also we'll talk about how traders make money with markets going up and down. And then lastly, financial instruments. So yeah, often when I worked with families, even after they got their nothing but control everything set up for me, they'd ask, how do we grow our wealth from here? It's one thing to have that set up, but it's another thing to actively work on that, right? So,
well, can you talk about that setup real quick while we're on that slide? The own nothing, control everything setup.
Yeah, so I talked a little bit about it on our last show.
Mm-hmm.
Where we're talking about private associations. We are talking about trusts, especially my background is working with business owners. So a lot of times when I talk about those things, we're talking about it in a way that we're looking for asset protection, privacy, being uncollectible, all that sort of stuff. Asset allocation. I mean, these two worlds really blend together quite well. That's why I've had these two segments of the business for a while. But the own nothing but control everything model. Well, first of all, that phrase, you might recognize this from John D. Rockafeller, right? It's a revelation of the method that he gave us, essentially. It's basically saying, look, I don't own anything personally, but I created another person legally through having a trust or a limited liability company, let's say. When you have those two things, they're technically new U.S. persons legally in whatever state you set that up in. And so I want those persons, not the individual, to own those things, not myself. And so, so that was essentially, what that phrase was talking about. So there's a lot of caveats there. It's not. Some people think, I got to have my trust own everything directly, which we were showing in our last show. That might not be the smartest idea if privacy is your concern.
Cool. I just wanted to make sure we didn't run past that idea and people know where to go if they want to hear more about that.
Yeah.
Because
so
in terms of spiritual aspects of economics, the whole private versus public conversation is wide and vast.
Oh, it is. Those two terms have really been bastardized in the movement, especially privacy. Privacy. A lot of people say I'm private, but they don't even know what that actually means, right? So anyways, I talk about what that actually looks like. And then we're not doing anything woo-woo or anything. Like, I'm just doing what high net worth individuals do. But the thing is, with that setup, though, nothing but controller thing setup, it's not exclusive to wealthy people. In fact, the whole kind of secret is that it can really be for anyone. It's just a matter of knowing how to use the system to your advantage. So that's often what I find my work being about, is just helping people get around these false paradigms that they have. The private can't possibly exist in the public, stuff like that. So
truth or mythology, essentially.
Yeah, that's what I was looking for. Yeah, exactly.
For me, it's like there is something symbolically, spiritually true about some of the truth or mythology in this realm. But when the rubber meets the road of how you actually put this to work in real life, in the system, there are specific rules. There's a specific right way that it works. And in that sense, there's another delineation between spiritual and physical. And it's interesting because that's what the public-private sort of mirrors in the material world. But anyway, let's just continue.
Yeah. Sure. The problem I see a lot of times with people and money, especially in our society in the US, but I mean, really worldwide, a lot of people are thinking, well, the only investing I should do is in real estate because it is tangible, right? The weird thing is you truly never own the physical land itself, right? I mean, it goes back to titles and stuff like that, which typically are intangible, but nothing wrong with real estate. It's just that the way that people purchase it is not actually buying it, right? We're going through mortgage most of the time. But what I have here displayed is how amortization works in a 30-year mortgage. Because often people's biggest investment, they say, is their house, right? But a lot of times people don't even own their own house. Maybe they have some equity. But if we actually look over the 30 years, they're going to pay more in interest than the house was originally valued at. So yeah, as you can see over the years, you're actually paying for over 2 houses.
So can you really call that an investment?
Technically, no. And technically, especially if this mortgage, this is really going to turn your biggest investment into your biggest liability. Just keep that in mind, because a lot of people, when they think of investing, they're going to instantly go to real estate, right? That's kind of the problem.
If you were to buy it outright and you owned, or not owned, right? There's all this title stuff, but
sure,
if you were to get it so that you were not making payments, but it's all paid for, that would be a different story investment wise.
That is a different story. And that's actually that's definitely what I recommend people do. If you are going to purchase real estate, buy it outright. As you can see here, you're not going to have to pay for 2 houses. I had a lot of people when I worked with clients on the other portion of the business, they would say like, hey, I'm sitting on X amount of cash. Like, I think I should just get a mortgage or something. So that's what I would like run into all the time. So with my background, I was like, well, I think there might be a different way than you're used to allocate that money. And it's something that's actually going to be beneficial in the long term for you. People's goal should be to buy their real estate outright, because I think it is a smart idea to buy some real estate someday. But some people might be thinking, well, how am I going to buy it outright? Especially if everything going on right now. But this really should be sobering for people, because this is the ultimate black hole of people's finances, and they're not even realizing it. I like having net worth and assets be liquid, have a lot of liquidity, just meaning it can be turned into cash very quickly if I wanted it to. Now, real estate, it's a little more difficult. I mean, it's possible, but right now in a more of a buyer's market, it might be more difficult. Now, another thing is, since we're talking about markets, I don't know if you've been paying attention to headlines or not. Hopefully you don't, because we'll later show how headlines are there to trap the public when it comes to markets. But what I have here pulled up is the S&P 500. It's like the main index. Think of it like as the one thing that really summarizes the whole market in one index. So what I have here is actually, because earlier this year, back in February, it actually made its all-time high in history. The S&P 500 made its all-time high, and then ever since it's dropped we'll talk about why here in a second. But what I am showing you here is that it dropped to almost 19% below its all-time high. So you might have been hearing on the headlines, how the market's been dropping because of tariffs or whatever. There's a little more intricacies than why it's dropping than just tariffs. Tariffs is actually kind of more secondary reason why. What's interesting is we started with the new all-time high in history, and then recently, back earlier this month, it almost hit a 20% drop from that level, which would constitute a bear market if it hit that 20% level. So we're almost there, not quite yet. We're still technically in a bull market, but just barely. So yeah, there's a lot of fear right now. There's a lot of fear going on around markets, especially how the public is reacting to it. This kind of shows the drawbacks of traditional investing with the stock market, because really with any asset, the idea is to buy low, sell higher, right? If you're a long-term investor. Well, in the stock market, most people, you're just going to be in that mode by default, right? Especially if you're contributing to a 401k or IRA. You're technically what they call long only, meaning that you can only buy, hold to sell later. You can't short anything, right? With that, you're susceptible to all sorts of stuff. The headlines going on right now, about tariffs, that kind of stuff. That's not necessarily a business cycle. That's more of a macro headwind, I would say. But you also do have business cycles like the time I was referring to back in 2008, stuff like that. Now, another thing is, I mentioned it earlier, but often when one is invested in the stock market for the long term, you're going to want to be in it for multiple decades, just so you get like an optimized return. Because, let's say I try to invest in the market today and then try to sell a year later. Well, with right now, with, pretty much a bear market that we're almost in right now, if I were doing a bear market, I might have a loss, right? It just trying to do it 1 year. So the multi-decade actually, if you look over the years on any index, it's going to be going up over time by quite a bit. It's a longer term play. High probability of it working out though. And now another thing is the exposure to volatility. So, probably the biggest example for people of that in their minds would be during 2020, right? When the market, absolutely tanked in a matter of days. I remember seeing it drop, more than 10%, more than 20% in a single day. So you can see that stuff happen in black swan events like in 2020 that we've had. But other things too, like the war out in Eastern Europe, or anything you might not be anticipating, like a Fukushima event, something like that. You do have exposure to that, and of course, when those things happen, markets can drop. So you're kind of stuck from square one, where you're hoping to buy low and sell high later, right? But what I want to talk about today is through capital markets, the public companies that are traded on the markets, and assets, I should say, for that matter, because commodities too, those can benefit those that know how these things work and can trade it, actually. So I just want to do a quick top-down analysis for you guys, because I have a lot of people saying, hey, the U.S. seems like it's on the way out as the world leader as far as prosperity, that kind of stuff. They often cite, the dollar's on its last days. But what I want to show you is a percentage of world economy, basically a who's who list. Now, the whole world, over 100 trillion economy, right? United States is about a third of that. We're quite high. We're actually the highest in the world as far as GDP amount. The dollar, as much as people rip on it, it is still the world reserve currency. Is about 60% of world reserves. And we have the largest GDP in the world. I mean, I have a lot more details on why the dollar's on its way out on my channel if you want to check it out. That's not really what this presentation is about, though. And I will say, even if it did, with trading, you could still benefit from that outcome. Now, another thing is, we're hearing the R word a lot. No, not that one. We're hearing about recession a lot again, especially on the news. Although the other one's one of my favorites.
We're allowed to say it again.
Well, apparently, yeah. I'm not used to that.
I heard there was an executive order.
That's funny. But yeah, everyone's talking about recession happening again. Seems to be every year, but each year seems to be louder and louder. So
it's part of the spell, right? If you say it over and over again, enough people believe it and they act as if it's true, and then it becomes reality.
yeah, which you're kind of seeing the news right now. Not that I'm saying I'm seeing a recession coming, but it is certainly like the narrative that the alternative and the mainstream and Clint Hive really talked about how they're really not any different nowadays, the two, but they're both talking about the same thing. And it's like, oh, because of tariffs or because of this, there's going to be a recession, right? In order to tell if we are in one or not is if we've had 2 or more consecutive quarters of negative GDP growth, which technically we did have in 2020, right? But a lot of our jobs as traders is actually to anticipate a lot of things, but this is something you start with at the very top of your research hierarchy, I should say it. But now another thing is I am not advocating Bitcoin or crypto. In fact, I'm probably the world's biggest hater of crypto. Look, I know, well, it's actually a mixed bag. I know some people that made some money off of it, and I know some people that lost a lot of money from it. It depends who you are, and your timing and that kind of stuff. Not to say that you should try to time this stuff. I don't think you really can. To me, crypto and Bitcoin, it's pure speculation. There's nothing backing it. You know, people say the stock market's fake all the time, but those are real assets. Those are real companies producing real goods and services with real attractive results. You know, what you're seeing here on this crypto chart, I mean, that's just literally speculation on a screen. So
it's pure
no one knows for
imagination.
sure where it's going.
Yeah.
What's that?
It's pure imagination.
It is.
It's
yeah,
Willy Wonka.
It is. And it's funny that it's valued in the dollar, right? An asset like Bitcoin, I mean, this is probably the best example of a risk-on asset where you're willing to just take on as much risk as you want. This is where you would go, right? And a risk-off asset would be different, actually. A risk-off asset would be, for example, gold. I was talking about crypto, and it kind of relates back to this general idea of pump and dumps, and this relates to markets in general quite a bit. When people hear about trading markets, they're going to picture day trading, right? Like some guy glued to a screen, like constantly watching markets all day, trying to trade every second. That actually isn't what professional traders do. Well, day trading is not what they do. Day trading essentially is a pump and dump. And basically cryptos have turned into a pump and dump where, because it used to be where day trading was really popular. Everyone was trying to learn it. I don't know why, but for some reason, the trading education space, which typically is not going to be people from investment banks or hedge funds, right? They're going to be just some guy who watched like a YouTube video or something, or has a YouTube channel. And like, so anyways, they'll often trade live and they'll say, hey, trade what I do. You know, if you join my group, you can trade you can just copy me, do what I do. So you join their live session and they like, you know, they supposedly bought at this time. And then so you do it. And then
it's like those law gurus are like, I'll just use my paperwork. You don't have to understand how the law works. I'll just give you the
exactly
template.
The same. Yeah, exactly the same. There's a lot of similarities between two. But so yeah, when you're buying, they're selling. They're using you as liquidity to get out. Now, mind you, they're not even that smart. It's often the because they use like shady brokers, those guys. So a lot of the shady brokers will tell them what to say. And so a lot of these guys they don't even know what they're doing. They're just being told what to do. So there's a huge conflict of interest, not only in that world, but this is the pump and dump, what I have shown here. This is what crypto has turned into. You know, Trump came out of his Trump coin. Who else? You know, like the Hawk Tuba thing, all sorts of stuff. So yeah, everyone's coming out with their own coin now, but basically they're not planning to hold it, right? They're planning to sell as soon as the suckers pile in. So yeah, I just wanted to show that because it's not what we focus on or trade at all. In fact, we're doing quite the opposite, and I'll show what that looks like. Now, speaking of pump and dumps, during the election and after election, we saw quite a bit of this.
If people don't understand pump and dump, do you remember Beanie Babies? That's all I got to say. Beanie Babies, huge pump and dump.
That's great. Now, this was a screenshot I took back in March. So these prices have changed since. S&P has fell even more. Bitcoin has fell even more. Tesla. However, I think it's a good example to show, like, you know, because I'm sure you guys heard about these things during or right after the election, quite a bit. And so in the media, alternative and mainstream, they're telling you to buy these things, right? It's nonstop. They're talking about these things, even if they weren't saying it directly. I mean, they're talking about it because it was hype. It was hyped up. But yeah, as you can see, a lot of these have dropped significantly. Millennial coin dropped 90%. Tesla stock dropped over 50%. So yeah, it's interesting how the news cycle can affect people, and I think the news cycle is the ultimate example of a pump and dump. So yeah, to go back to time and money, right? Because you're talking about that book, and we're talking about how most people, they equate money with labor spent. This is crazy. So this takes the average U.S. wage, which is close to $30 an hour. Now the index, the S&P 500, like I was talking about earlier, it takes about 187 hours with the U.S. average wage just to buy one share of this, share of the stock market. So this is just showing you, if you're not aware of these things, how Wall Street alchemizes time, but also just how compounding can affect you if you're not participating. This can really wipe out people if they're not doing something about it.
Yeah, this chart is really telling. I mean, that's such a huge difference. This is number of hours that a U.S. average wage of pay is needed to buy one share of S&P 500. We're looking at going from 10, 15, 20 hours just 50 years ago up to 200 hours of work. So that's quadruple. That's not more than that. That's 10 times. We're 10xing it, right? Mm-hmm. And on this subject, I want to talk about this for a second, because this is a big part of that book, Money Grows on the Tree of Knowledge. And on the subject of money being alchemized out of time, that it's literally the modern economy has figured out how to turn lead into gold. Lead is symbolic of time. So they're turning time into gold, which is the holder of value. That's literally what this economy is about. The metaphysical potential here is huge. If you want to look at this from like a spiritual consciousness, the reality is mental, our mind creates reality type of perspective, that this economic change, let me bring that back up. This change of how the wage cannot buy the same amount, it's not just like, this is just one metric of that, but across the board, you look at what the average earnings breakdown versus cost of living for things like a car, a house, and things like that. The chart looks very similar. It's not just the S&P 500. That's just one example. It's across the board, right? So how does this affect people's perception of reality? Tracy, in this book, she writes, because of the artificial relationship that has been forged between time and money, and because the magic of fractional reserve lending, money can be expanded or contracted with time. The faster money is traded, the more velocity it has, quickly moving, and therefore there's more volume of money. But conversely, the more money is created by banks, the more goods and services must be created to absorb it, to make it quote unquote real. And the quicker these goods and services must be traded. Otherwise, if there's more money than there is stuff to absorb it, inflation results. So go back to lockdowns, right? The money velocity grinded to a halt.
Yeah, and I saw those two negative quarters, right?
Yeah. The people were not going out and spending money. And conversely, there were less goods and services being provided or created to absorb all of the money that's constantly being invented out of this like credit system, this fiat system. And this point is so important because it's exactly why we see this money velocity question is exactly why we see government spending on crazy nonsensical stuff always exponentially rising. This is part and parcel of the fractional reserve money system, because that's literally necessary. If the government didn't invent stuff to spend money on, like research on how cows react to poetry, like stupid stuff. And if that wasn't constantly going up and up, then that money wouldn't be getting absorbed as quickly enough for how much is getting added to the system. and inflation results. And what we saw right after, lockdowns was big inflation, of course. So Tracy continues, she says, what this creates is an unhealthy artificial relationship between time and money. She's talking about this money velocity thing. It's one that affects our lives in ways we don't fully perceive. When the economy tanks, it's described as slowing down. A recession isn't merely a lack of money, it's a lack of velocity. The US government's approach, inflating the money supply while decreasing domestic production and employment, leads to a distortion of time perception among the public. As the value of money goes down, you have to earn more of it to survive, but wages remain mostly fixed in relation to time. So you end up spending more time working to earn the same relative value. Of course, your time is limited. You only get so many hours in a day. As the economy worsens, time therefore seems to move faster and your youth drains away more quickly. So this is exactly Saturn cutting off Mercury's legs at the knee. What she's describing is the secret behind this economy. And if you're stuck in the rat race aspect of it and you don't find a way out of that matrix, you are going to gradually find yourself on this time speeding up program, and you blink and you're 50 years old and you have no equity in anything. You have no actual material wealth. You're probably actually in debt, and you're working more hours and harder than ever for less quality of life. And that's something, unfortunately, a lot of people, like, they reach our age relatively, and they're starting to see that they've moved nowhere. And it's like super depression time, and there's not enough people are aware that this is kind of like a by design aspect of the system. This is the sacrifice required for the alchemy of this economy to function, this musical chairs game of fiat currency. So I wanted to put all that out there. And then while we're thinking about it, what the connection might be between time and money and these Doge cuts to government spending, like how that might affect people's perception of time. Because in lockdown time, whenever the economy slowed down, I feel like a lot of people actually felt like time was dragging, like time slowed down for their perception during those 2 years. It felt like a lot longer time period. Maybe it didn't fly by, right? But since these cuts have been going on and this year has been happening, this Doge thing, I'm not saying I'm for any particular administration or against it, but I've actually felt like, this is anecdotal to me, but I felt like I have more time. I felt like I've had more time available to myself. And I don't know, maybe that's just me, but I wonder if there's something going on in the field of consciousness of the collective that is reflective of some of these new currents happening in the economy.
Yeah, it's interesting. Well, speaking of time, when it comes to markets, remember I was showing you, most people are long-term investors in it, right? So it's a delayed gratification game oftentimes. When people try trading, it's like they're looking for instant gratification. So that's why they're going to fall into the day traders mentality. I just want to show some quick statistics because I'm talking about day trading just because whenever you try to search trading, this is the first thing that's usually going to pull up. 90% of day traders are going to lose. And Berkeley did quite a good study on this, actually. 90% of day traders lose 9% of their money within 90 days. So if you try it long enough, you will lose all of your money. This is a statistical fact. Over 40% of traders quit within a month if they haven't lost all their money before that, day trading. But 87% quit within 3 years because oftentimes what they will do is try to do the day trading over and over, even though they know it hasn't gotten them results. It really comes down to the trading education industry perverting how this stuff works. And so they basically trick everyday people into thinking, oh, this is how Wall Street does it. And so what they end up doing is they end up trading a high volume trading strategy, which basically means you're spending a lot of money doing different trades within the same day. So you're spending all these commissions as being paid out to the broker, and you're just losing money in the trades, right? So you're basically just giving the money over. So that's why eventually people will quit.
You're feeding the middleman. Can you go back to this
Yes.
slide? This is important too, because like I talked about in the intro, that exactly the same as the ancient world, our system is built on sacrifice. These guys are the sacrifice. These guys are being sacrificed to the system. Back to Twyman, she says, the connection between money and sacrifice, including slavery, imprisonment, and death, is inherent in many of our financial terms. Finance comes from the French word finir, meaning to end or settle a dispute or debt. The word mortgage means death pledge. A bond was originally a serf or tenant farmer in Middle English. It still implies being handcuffed, shackled, or tied up. It still implies economic slavery. The true prima materia is our blood, sweat, and tears, our youth. We will be consumed in the belly of Moloch, she writes. So to avoid it, we throw our babies into the fire as a substitute payment, aka we sell out the future by taking more debt and more in the form of credit. And I want to point out, if most of these traders are fed into the system and fail, are sacrificed, it really does start to resemble a sacrificial machine, which is fed by, credulous, youthful people that believe that they're going to get somewhere in it. And the system just encourages the continually kicking the can down the road and burdening future generations for short-term material gain. They love to talk about it on the news, like the national debt. No one ever, it's going up. No one ever talks about the fact that it actually can't go down. It can only go up. There's like, what's the big deal? It's inherently, every dollar that's created comes with debt attached to it. So like, that's just, be afraid of the wrathful God. The wrathful God will consume you. It's the same thing, but you can't just not participate really. The thing about this statistic, especially when it comes to investing or trading, is that, maybe it's worse in crypto than in regular trading. Maybe not. They call it a casino. To play and win, others have to lose. How have you kind of come to terms with the ethics of that? The fact that it's got to be that way. And, you're not directly causing people harm, but winning means someone else loses. How does that come into your thinking? Is this why you're trying to help people do it with your classes to sort of offset that karma?
Well, no, I don't think I get any bad karma from that, or anyone that trades, really.
Cool. I mean, I'm not saying you do. It's just like something to think about.
But no, it is something I'm concerned about, though. Like, this is the result people are often getting. Basically, I view this as a amoral thing, trading in general, because money is artificial, right? Technically, a company is artificial. A lot of them do make things and do things, right? The company itself, like the corporate charter, all that, it is artificial. So on a certain level, I do acknowledge that. And oftentimes, yes. And like recently, I shorted Tesla while the news was telling everyone to buy it. Do I feel bad when it does go down and I make money from that? Not necessarily, because I just have a view on an asset. And if I happen to be right and I made money on that, I don't see it as a moral issue there myself.
That's cool.
Now,
just
I'm
something
not
to think
going
about.
all in on pharmaceutical companies or anything, but
these are the kind of questions people will hold themselves up with from actually taking a step towards their own prosperity. They get this religious idea beat into them. Money is the root of all evil, when money is just a neutral storage of value, a storage of energy and value. But with that psychic connection, money equals evil. They have subconsciously programmed themselves to avoid ever being successful in finances. I'm not immune to that. That's why, despite resistance to the subject, I'm bringing this subject onto the podcast, because it is the world we live in. This is life, and it's got connections to our spiritual existence, like everything else in the material world. They're two sides of a coin. They're not separate at all. So I just wanted to bring that ethics question up, and because I'm sure there's somebody out there thinking about it. So thank you.
Yeah. And we'll talk about that in short selling a little bit more. how that relates to ethics. Like I said, the professional traders don't do what I just showed you, where the guy's watching like multiple charts on the screen, day trading. They're not yelling at each other across the trading floor like what you'll see on a Hollywood movie, right? Because we often picture the trading pit is what you're shown in the movies, but that hasn't existed in a long time, just because everything now is, of course, done online. So even with markets now, you don't need to go to that trading pit anymore. Go to the New York Stock Exchange every morning. It doesn't work like that. Now, another thing is, especially with my background, I get a lot of comments of people saying like, oh, well, hedge funds are greedy. They're just, evil. They're constantly shorting companies. They're just betting on everyone's demise. What they're often missing is actually that's literally only half the story. Now, another thing is they say that, oh, well, there's no point in me participating in the market because it's all controlled by quantum computers and, Jews and their algorithms in New York. That isn't true either.
Quantum computers aren't even a thing. That's like another
it's a joke. That term gets thrown around a lot. Now, there are high-powered computers they're more like execution tools. Really, nowadays, only institutions really use them en masse. Some like DIY traders try to like come up with their own algorithms. Don't recommend that just because, I'll show you later why that doesn't work. But anyways, just wanted to throw that out there before we get into it further.
So like throwing that misconception aside maybe is part of helping somebody cross over the hurdle of thinking that they're not cut out to succeed here.
Right. Yeah. It's often, I think that's what Wall Street wants you. They want you to believe these things, right? So you stay ignorant of how it actually works. But yeah, especially nowadays, it's more accessible than it's ever been.
It's like the priests of the ancient world that knew from their astronomy when there's going to be an eclipse, and they act like they made it happen. That's exactly what we're going to, black swans, that's what's coming up too. But, it's this creation of the perception that they're all powerful, the Wall Street traders and the big financial investment firms and guys, that they are so far ahead of you that you'll never be able to make a dent in anything worthwhile in this world.
Yeah, that's another conception. And that's another one they definitely want you to think. And I think the best example of that is the Big Short movie. They want you to think that, oh, it's so complicated to understand why it happened. And then it's also way too sophisticated to know what Michael Burry actually did. So there's no way you could be someone like him. Now, funny enough, a lot of my mentees on trades, because that movie is about his one big trade of shorting the housing market, essentially. He got a pretty good return. I think that year he got close to 140% return on an annual basis, which is pretty good compared to everyone else during that year. But nowadays, with how trading works now, that's actually not that, like, it is still impressive, don't get me wrong, but it is definitely achievable, that type of return, and doesn't even had to take a whole year to get that. But anyways, we'll talk about that more. But yeah, anyways, black swans, they're inevitable. They're going to happen. But a quick definition, because I think people get it wrong a lot of times. Like, I know that Talib guy mentioned it in his book. I think he has a book about it. But this has been a term in the financial industry for a very long time. And essentially, it's just something that no one saw. It's an event that hasn't happened before. No one saw coming, and it makes risk management models useless.
It's kind of like the fact that, when people are talking about globe skepticism, they use the word black swan because the globe model says the curvature of the earth means that you cannot see something beyond a certain distance because it dips below the horizon. But as soon as you make the observation with your own eyes that is not true, that you can see something further away than you should be able to, much further away, then that becomes a black swan. No longer are all swans white, metaphorically. There is now a black swan here, which means the statement, you can't see a certain distance because of curvature, is no longer true. This is where I like to use black swan.
Yeah, so, it seems like as of late, they happen every couple of years now.
Like cooties, cooties was a major one.
That's probably the best example of one in our lives.
And I think that one thing Twyman talks about is this exact thing. She doesn't use the terminology Black Swan event precisely, but she does talk about economic collapse events, not just chaotic manifestations of, randomness, but as rituals that they're engineered, they're programmed subconsciously beforehand. And in some cases, a lot of cases, they literally and symbolically mimic ancient sacrifice rituals. And this whenever during cooties, you have, a certain demographic of people holding up signs that say, I can't breathe because of, you guys remember what happened. And at the same time, they're wearing a mask over their face, impairing their breathing. And they're not connecting that these two things are just absolutely vicious irony, but that's the kind of pregame programming that occurs that, later comes true.
Yeah. Well, another irony from that time was when everyone was freaking out about inflation, but yet they were hoarding things. They were buying en masse. So, I mean, come on, people.
They were accepting money created ex nihilo in the form of stimulus checks and all that.
Yeah. Well,
inflation, but it's okay if I take this money. It's fine if I do.
Right.
Not inflation when I get it.
Yeah, I'm still upset at Trump. I'm like, I never got my stimulus checks. But yeah, I mean, these Black Swan events, they are 3 standard deviation events, meaning basically they just mean 0.03% of the time. It's funny. It was funny about that number, 0.03%. To go back to the day trading, that's actually how much the S&P 500, the market, moves on average every day. Trying to say that you can make money, that's because I'm often the guy at the party that explains trading and that kind of stuff. I get asked these kind of questions. They're like, well, why don't you day trade? Like, if I had $1 million portfolio and I made 0.03% every day, wouldn't that be a good return after a while? It's like, okay, but you're trying to make, that's assuming you're always right on that 0.03% move every day. And then you have to factor in that you're willing to risk a lot more than you're willing to make. We'll talk about that later. But yeah, these Black Swans, they happen rarely, but they are still in the realm of mathematical possibility, especially in our own lived experience. So it's something that I want to take account of when we're talking about markets here. And this goes to hedging. Now, especially in the truther space, a lot of people will say gold and silver is going to be the hedge on the dollar and inflation in general. I would say that's more true for gold. Silver, if you look at the silver chart, silver is actually the same price as it is today as it was in 1971. So I wouldn't say that is a hedge on inflation. Now, mind you, gold has gone over $3,000 an ounce. Back in 2020, I believe, or 2019, I believe it was closer to 1,500. So it has doubled in recent years. Although I will say gold is not a perfect hedge because if you remember, during the early days of the scamdemic, let's just say, all assets were dropping, including gold. All assets were in the red during those days. So it's not exactly a perfect hedge. So what is a hedge? Because that term gets thrown around a lot, but I want to quickly define it for you guys. It's an investment or trade made to reduce the risk of an adverse price movement in an asset.
Okay, this is where I'm going to cut
added this in here.
Yeah, I snuck this into your slideshow. All right, because you're talking about hedges, and I want to always, as always, I want to bring this back to the ancient world and the mysticism of those so-called pagans. This is a coin showing the Roman goddess Juno with the epithet moneta, Juno moneta. She was a goddess of memory and warning. Juno moneta was the divine namesake of the Roman mint, where coins were created. From her temple is actually where coins were being struck. So back in the day, the priests had not just a hand in it, but they were the ones responsible for creating coinage. And if we think that there's not this mystical element to how money is operating today, you're dead wrong. They just hide it better. They've dressed it up in more materialistic clothing. But from the beginning, money and religion have always been tied hand in hand. And maybe back then it wasn't even quite as devious, perhaps. I don't know. But with her coins being formed at her temple, struck at this mint. By the way, mint is the same word as mind. M-E-N-T, M-I-N-T, mint. This is where money as memory, or a measure of like retention of value, a memory of value, comes from. The Latin word moneo is where we get the word money, but it meant to warn, to foretell something bad that's going to happen, essentially, to give somebody a warning. And isn't that just related to the economy? Isn't that so important to the economy to know when there's going to be something about to happen that's not good? There are people in the know that are aware when some levers are being pulled intentionally for a chaos event, a black swan event. So let's talk a little bit more about these coins. Every coin was a token of a sacrifice, meaning that to get these coins back then, you brought a sacrifice to the temple. And these were a literal hedge against chaos. They were a contract with the divine. I'll explain that better. So in modern finance, a hedge is a protective measure. It's a way to reduce your exposure to loss. But what most people don't see is that they were doing this in the ancient temples, because of these coins, or receipts for offerings, essentially. They were proof that a sacrifice had been made, that these offerings or sacrifices of animals, food, or goods to the temple, they were the resources that the priest class lived on. And it's kind of like the collateral that you offer up to the bank to get your imaginary monopoly money. It's very similar still. So they would give these temple coins to the supplicant as proof that they were pious and they'd made a sacrifice. Now, Tracy Twyman basically talks about these temple coins as a spiritual technology. And she doesn't talk about them as hedging, but that's what I see in it. These ancient sacrificial systems, the offerings were made not to guarantee that you were going to succeed. It wasn't like, I make this sacrifice that I can have something good happen. No, it was to hedge against divine wrath. They were making these offerings as a plea to the gods with the hope that their crops wouldn't fail, that there wouldn't be any natural disasters, no invading armies, no plagues, things of that sort. So the modern practice of hedging by traders is kind of an echo of the temple rite. It's an offering that you make just in case. It reflects this idea from the ancient world of atonement, which is what the sacrifices were for. The literal etymological sense at one meant atonement is about the act of restoring balance between forces. And in the derivatives world, or options spreads, which we're going to cover later, they structure trades that limit loss. That's preserving the temple. They define risk. That's containing the chaos. They acknowledge uncertainty. That's your submission to higher forces. So it's ritualized humility, which is what sacrifices were, but in the financial world, in the financial form. Hedging acknowledges that the trader's knowledge is incomplete, and they do not have the ability to perfectly predict everything. So it's an offering to the gods. It's an offering to the unknown. If I am wrong, let this soften the blow. So where the ancients sacrificed goats, wheat, incense, etc., the modern trader offers a put option, but it's symbolic of the same thing. You catch my drift here?
Yeah, I'm liking the segue.
I'll let you continue, but I couldn't resist. Like when we talk about hedging, this is where coinage coinage originates from the idea of hedging.
Right. No, that's fascinating. Yeah, I'm not sure if you looked into the word hedge at all, but I'd be curious to see what's going on with that. I haven't myself, but
I didn't even look into the word hedge. Probably should. There's like all the words have gravy.
Yeah, right. Yeah. We're just ladling out as usual.
What strikes me is that you're not just teaching people how to trade. you're walking them through a kind of initiation. You're showing them how to wake up inside the system. You're like Morpheus, waking up Neo inside the system. How to stop reacting to news, to the volatility, how to start seeing the deeper patterns at play, not following the crowd, not getting in a panic or in a frenzy. It reminds me a lot back to Twyman, just because I refreshed myself with that book to think about Alchenomics, as it's called, the Alchemy of Economics. She frames the entire financial system as a kind of simulation, like a magical illusion that's built on belief and ritual and trust. I mean, literally, it is that, because money has no intrinsic value. It used to be gold or silver, used to have intrinsic value, but now it's pure belief, right? And so she's using the movie The Matrix not as a metaphor of reality itself per se, but as a metaphor for the economy, that most people are stuck in the economic matrix. They believe the narrative. They chase the outcomes that are put in front of them. But the trader who really understands what's going on, the guys like you, they're reading the matrix code. They're no longer asking when they see stuff happening in media or whatever. They've transcended the question of, is this real or is this fake? Which is what most truther types are still on. Like, is this real? Is this fake? They've gone past that. And now they're asking, what's actually effective? What's actually effective inside this system? We're going beyond the real or fake binary of what's being put in front of us. And we're just looking for results. And that's a deeper level of reality than duality. Effectiveness or power or whatever you want to call it, that's the primary level of reality. That's what the duality comes out of. So you're going to go and align yourself with the essence of reality itself, effectiveness and power. That's the truth. That's the truth beyond whether or not something in the duality is real or fake. So it's amazing, money, the economy, it's like a mana machine. Money is not multiplied by value, but it's multiplied by motion and belief, that money velocity thing, and people's confidence in the economy. So you're showing people with your roadmap, here's how you unplug from the belief system that creates the reactive mindset and causes you to be tossed about with the tides and the currents of what society is play acting on your screen. And you're saying, here's how you unplug from the reactive and start navigating on the higher level. Do you see what I mean? Do you see yourself as stepping outside the matrix when you make your livelihood this way?
Yeah, well, it's interesting because instead of reacting to those headlines, I'm actually using those headlines as liquidity. Let's say I have my put option on Tesla, like I did recently. So by the time the tariffs headlines do come out, and the Tesla investors are freaking out and selling their stock, I'm actually using them as liquidity to get out of my put option. So that's what I mean by that. But yeah, it like I was saying, I had that thought earlier in my life where these companies we're dealing with almost on a daily basis. It seems like instead of them having affect me, I can essentially trade them, right? Instead of so yeah, that's it, to me. I haven't found any other thing out there besides trading that allows oneself to do so in such a measured way. Because a lot of people in the truther space, they say, "Oh, I predicted this," or "I predicted that." Well, put your money where your mouth actually is. If you're really good at it, then this should be up your alley, right? But that's what's kind of interesting to me, because I think, as much as those guys can be right or wrong, well, with trading, it's quite apparent whether you are or not.
Yeah, well said, man. That's a really good point. If you are interested in the truth, why not? Or you think you can see things that other people can't see, why limit yourself to the normal sort of like Kronos cutting off Mercury's legs type of lifestyle, right? With that's what most people are stuck in, even thinking that there's kind of like a nobility to that sacrifice. But you get to choose what you sacrifice, just like the ancients coming up to the temple. They want to bring a goat, they want to bring some wheat, whatever. You get to pick your sacrifice. You don't have to sacrifice your vitality, all your time, all the best years of your life for nothing. You know, you can sacrifice instead a little bit of time to learn a system and then make your offerings in the form of investment trades and contracts, right? It's like you got to do you're going to have life, the economy, the flow of life, whatever, all require sacrifice. When you eat something had to die for you to eat that, right? But I hope that people are getting the point. And I'm talking to myself here because like, I'm not doing what you're teaching, you know, but I see the value in it. Otherwise I wouldn't have it on my show. So I'm thinking to myself, like, we get to decide what we sacrifice. I talk about this all the time. We've been programmed with what I call the messiah. The messiah is that it comes from, you know, Christianity is a form of this in the way that it's dogmatically taught by the mainstream, that the best guy is the guy that sacrificed himself for the collective, right? He let the crowd kill him, and that's what saved everybody. It's the same story in cooties. You know, my mask only works if your mask works or whatever. Your cowpoke, my cowpoke only works if you get your cowpoke. Mm-hmm. Essentially, it's like the communist idea that you sacrifice yourself for the good of everybody else. And that's how good people would just do it, right? But it's stupid, because if you sacrifice yourself and everybody sacrifices themselves for the collective, everybody's sacrificed. So you're going to make sacrifices in life, time, energy, attention, etc. You start thinking about all of your offerings or outputs or your actions, what have you, in that realm, in that framework of like, this is my offering, this is my sacrifice for today, and realize that you get to decide what you sacrifice. Isn't it more powerful to sacrifice something that is not serving you than something that's good for you? Like, wouldn't you say you're better off if instead of sacrificing your best goat, your favorite lamb, whatever, that you sacrificed something that's bad for you, like your drinking habit or smoking or something like that, right? Sacrifice what's not working to gain something better. It's the reverse of most people's mentality, where they're like, to be good, I have to give up what's best about myself or what's best about my life. And so your trading lifestyle is exactly what I'm talking about. You're sacrificing something that sucks, having a dumb day job, you know, being a wage slave, never making it past even or getting out of debt. You're sacrificing that for freedom, you know, for time. You're getting your youth back. You have time to spend on your health, time to spend on being in nature, whatever you want, right? So that's the thread that I want to like just tie together with all this, and why it's important, why it's a topic that, even though it might be a little dry to talk about, like, you know, these trading things, or we have this negative association, money is the root of all evil, whatever. The end of the story is that, like, this is your life, you know, and this is something you can do. This is an option. This system exists. You're in it one way or the other. So like, how do you want to play this game? That's what's resonating to me about this.
I'm glad that's your takeaway, because I mean, what you just said there, I mean, that's like the whole essence of my life. Yeah.
Yeah.
I've always been kind of an outlier. You know, like I was saying earlier, I've always had propensity for pattern recognition. I didn't know that was a trait of high IQ. I didn't even know I had high IQ until I was 20 years old. And you don't have to have an IQ to do all this. You don't have to have a lot of money. In fact, you don't have to have a ton of time.
In fact, your IQ is mutable to how much pattern you intentionally look for. So like somebody that studies a system like this, like you know what they say, right? That learn how one thing works and you know how everything works, that's another reflection of the alchemical principle, that it's like nature does things in a certain way and that repeats in some form, in some echo of that form across the board. So if you can like grasp the pattern of how things work in something in life really well, you master one thing, then that mastery applies elsewhere, right? So your IQ, your IQ is not fixed. You're not just dumb, like
Right.
if you, the more information that you have or the more learning you do, the more connections you make from thing to thing, this is like that corresponds to that, the easier it is for you to perceive correspondence naturally. And that's what pattern recognition is. So I'm just want people to know, it's like, yeah, I'm high IQ too. I've kind of always been, right? But you can learn things like we talked about in the show and your IQ changes. It's not like a static thing.
Right. I like that you said that because, after my experience in this, because I had business experience before I even traded, but after I viewed business completely different. So yeah, it goes into a lot of different areas of life besides just finance, but you don't have to be a numbers person for this. You don't have to be a tech person. You don't have like a fancy setup or anything. You don't have 50 monitors. In fact,
it's not like the movies.
No, it's not like that at all. So you could get away with just a simple laptop if you wanted. It doesn't have to be fancy. You can start options trading just by opening a brokerage account, which is really easy nowadays. Anyone can do it. It's very doable. You don't need to be an investment bank or hedge fund to be a successful trader. As much as the guys on YouTube tell you need a day trade and have these multiple monitors and you need $25,000, that just isn't true. My first boot camp, I actually had one guy, he started with just 1,000. And I actually have him as a testimonial. He made 80% in a couple of months, just with that $1,000. So you can start with, very small amount of money. I wouldn't start with any less than that, but yeah, just showing that as an example, like, this can be used by everyday people. It's just that everyday people are just not privy on how this stuff works, right? So yeah, my group is called Trading Business Builders, and it's a private group I started last year. So yeah, it's been a lot of fun, and it's grown into a community, and yeah, it's got a few friends in there, and I got you, Chance. We got Beth Martins in there, so. Yeah, I structured this as a group boot camp so that we are not learning just by yourself. Now you could if you wanted to, but I often found that most people not only want, but learn best in a group setting. So I actually show you how to learn how the market works in just 8 weeks. It's really that simple, 1 hour a week of work, sometimes even less than that. So it is opening up again soon if you guys are interested in it. Any last thoughts on that, Chance? I know you've been through the course a little bit.
It's well made. It's set up nicely. And, what we talked about were more the conceptual things in this talk.
Yeah.
But you do go through, start here, then do this, then do that to get yourself set up to then start applying the more conceptual ideas you're going to learn later. So you're not just like left high and dry to try to decipher Brandon's arcane statements. You're like, you're walked through a process. You get where to trade, how to do a trade, how to make a portfolio. You get those basics, and then you start to learn the plan, and then you start to have an idea of what you can do to experiment. So it is something a complete novice, know nothing about trading individual can step into and have a little side hustle of playing around with, a small amount of money that they can afford to lose potentially, and see what they can do with the skill set that Brandon teaches. And you have all these comments on one of the previous slides of people talking about their big wins, So
yeah, that's on the group.
But as you said at the beginning, it's like the real game is like the decades game, right? It's not the just this year game. Yeah. So if that's the case, I'm thinking like start sooner is better. Start sooner.
Yeah, I wish I learned this stuff in like high school. Yeah.
You already did start young though.
Yeah, I was pretty young though. Yeah.
You're like what, 19,
young
20
20s.
right now? 20
Well,
years
now
old?
I'm 29.
I'm just
Yeah.
kidding, but you're like.
But I started this in my younger 20s. So yeah, it's been an interesting journey, but yeah, I'll leave you guys with this last quote from the same Jesse Livermore. The nature of the game as it is played is such that the public should realize that the truth cannot be told by the few who know. And this is the general attitude of professional traders, but now with information being so public, especially in markets, it's not even that the truth is hidden, because you have thousands of data points in markets. But what he's talking about here is like only a few can put together what to focus on, and just to leave the rest as just noise.
That's literally the same idea that all the ancient philosophers of the last several thousand years will say. It's like we can't come right out and tell you the truth, because you have to be ready to receive the truth. You have to be asking the right question. So that's why there's mystery schools where you go and get initiated in. You come to them and say, I want to learn, here are my questions. And that's exactly what you're providing. It's more than just like a set of videos that you watch, but it's the community that you've created as well. Like the forums and the group calls and all that. So it is like the same structure as a mystery school. And there isn't a cut and dry, this is exactly what to do, follow my instructions, my special recipe. And that's exactly the same as mystery schools and philosophy and truth as a metaphysical concept. It's not something you can just hand to somebody, but you can guide them to the questions they need to ask to get there themselves. Is that how it works with trading as well? Like you're guiding people to the point where they can start asking the right questions and start seeing through the right lens to get it for themselves. That's what it's about. Yeah.
And usually after the education phase, when they're ready to get into the implementation stage, which is just after 8 weeks, so sometimes when my mentees give me their first trade ideas, I tell them, look, this is probably not going to be your best one of your trading career, but we can learn a lot here. Because like you're alluding to, like you can start addressing questions you weren't asking that I'm going to ask. So yeah, I make sure to keep my eye on people's work. Make sure to tell them something they missed or something. That's why in our theses we actually have them. I give the group a lot of tools, because it's one thing, the information, but without the tools I provide the group, I don't think it'd be possible even for me to be doing it on my own without the tools I use. It's one thing to learn the theory of it, but to actually have skin in the game and do it. Then you have the emotions start to come in, so it becomes a whole different game. So that's when the mentoring really comes into play.
Cool, man. Well, I'm glad you're out there doing it. I'm glad you defected from the inside and you're providing this cool service, and especially grateful that you've got the perspective to allow for me to layer on these esoteric aspects of what I see in this world that you're a part of. So I had a lot of fun with this one, and I appreciate all the effort you went into just to prepare a presentation for us. And I look forward to the next time we get to have a chat, dude. Thank you.
Yeah, likewise. Good being on again.
Hey there, time alchemists. If the first hour cracked open your mind, the second is where we pour in the gold. InnerVerse Plus members are already deep in the distillation with Brandon Sterling, exploring the sacred science of markets and esoteric economics. We start with an astonishing truth. What if market movements weren't chaos, but prophecy?
There are mechanisms in the economy that actually can predict the next 6 to 12 months. There's two processes of filtering out the risk of being wrong.
And the temple rituals of the past. They never disappeared. They just changed form.
Where the ancients sacrificed goats, wheat, incense, etc., the modern trader offers a put option.
And at the heart of it all lies a spiritual balance. Not bullish, not bearish, transcending the zoo entirely.
The whole point of my system is to be directionally agnostic.
This is literally in the alchemical process. The final stage, rubedo, follows the death of polarity.
If your neurons are nodding and your third eye is raising an eyebrow, Join InnerVerse Plus and add some new pages to your alchemical cookbook. InnerVerse Plus isn't just more content, it's more current, more resonance, more revelation. It's a vibe. Tap in at patreon.com/InnerVerse or join the YouTube channel membership. The gigantic archive of extended shows is waiting for you. If you do decide to join Brandon Sterling's Trading Business Builders course, make sure to use the affiliate link in the show description below to support InnerVerse by enrolling. If you're feeling the call to explore deeper into the InnerVerse, head over to InnerVersePodcast.com, where you'll find all these illuminating episodes, including recent mind-blowing content you might have missed. While you're there, check out the Sound Healing page, where you can book a one-on-one Biofield tuning session with Chance, or explore tons of free knowledge about your energetic anatomy and how to decipher the messages your body is sending you. These powerful sessions can help you clear energetic blockages, reframe rigid personality problems, and resolve negative trauma-based conditioning so you can vibe with your highest self and unlimit your potential. InnerVerse is also supported by listener purchases from tippecanoeherbs.com, one of the best sources on earth for potent plant medicines and esoteric herbalism education. Use coupon code InnerVerse for 10% off your cart. Or drop into the episode description and find our affiliate link with Lotus Way and pick up some incredible flower essence elixirs and aromatic sprays to augment your frequency with powerful positive energy. In a world of manufactured panic and inverted alchemical economics, sometimes the rarest asset is attention. Thanks for spending it here. And remember, if you must engage in commerce, trade like a wizard.